Okay, are you still awake? Can you still hear us? Yes? Now to the trailblazers. Where is Leah? Where is my second panelist? Where is she? Yes, there she is, Christina and Leah. Welcome, welcome. Hello, hello, hello.
Good to see you, Iman.
Yes. Listen, we mentioned many obstacles. We mentioned the old ways. We mentioned the impossibilities. Now is the time to mention action, to mention dedication, to discuss call to actions in bold and global ways. So thank you. Yes, 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 yes. Okay, take your seats. Thank you, Leah, for making it to the Grand Palais. Yes,
thank you.
It works. Thank you, Christina.
Thank you.
We have a little more than 20 minutes to discuss your amazing initiatives and to hear about your particular vantage points, which are, collective and collaborative experts. So, you both have a long experience of building collectives. Thank you. To mobilize investors of all kinds on a global scale. At GSG Impact, at Convergence. You know the tears and the joys and the nitty-gritty of public-private cooperation. 10 years after the Paris Accords, and I keep on repeating it because time is running out, so 10 years, it's already been 10 years. It's high time we collectively stopped small-scale experiments and went full force to deploy the amounts of money beneficiaries call for, and rightly so. So what lessons, in your opinion, should we pay attention to? Leah.
Sure, I'm happy to be here. Thank you so much. It's lovely to see friends and colleagues. So I work in an area called blended finance. I think, and I would imagine most of you in the room have heard of blended finance. In particular, oversee an accelerator within Convergence. Convergence exists to solve the problem in terms of the cooperation between public and private partners to mobilize more private capital. So there are kind of a number, if I look back on the past 10 years of Convergence's existence, there are some really key lessons that I would take forward. One is consortium-based building. And so what do I mean by that? Ultimately, we have looked at a number of blended finance structures, some of which have worked, some of which haven't, and most of which have come from a consortium-based lens. I think a really great example would be BlackRock's private equity firm that ultimately started from a question: how does private equity solve for climate finance? From some design funding that was received through Convergence, later some other testing, BlackRock ended up launching a $600 million fund to address climate issues. That was done through a consortium of UN partners along with aligned capital consulting groups. So these consortiums can come together quite effectively. The other lesson that's big and bold is make it demand-led, make it market-led. One thing we're seeing that's very popular in Asia right now is this leaning into nature-based solutions, nature credits. That's mainly for corporate supply chains. It's not thinking through the lens of a traditional institutional investor, but the corporates are leaning into this model. They've subscribed to larger climate goals. So within the context of blended finance, these supply chains are going greener, they're going greener faster, and ultimately this is a demand-led approach. The last thing that I would mention in terms of what is truly igniting change is don't be afraid to lead as an individual, but drive as a herd. So what do I mean by that? We at Convergence oftentimes throw out problem statements around blended finance. So for example, can blended finance solve for the financing gap for nature-based solutions? Yes or no? I would say 3-4 years ago, we really didn't know, but we put out the problem statement, and lo and behold, there was quite a bit of activity, business models that were supporting nature-based solutions, nature credit. So we led as an individual, but we only started to curate a herd, which now represents a pretty large investing interest pool in advancing nature-based solutions. So those are 3 core areas and lessons I would say can really help move things forward.
Christina.
Thank you, Leah, for this, because it's a perfect bridge to introducing what we do at GSG Impact. And I really like this idea of going together as a herd. So just for those who don't know GSG Impact is a UK charity. Our mission is very simple. It's to build impact economies all around the world. And so today we represent 46 countries that have joined us on this mission. And how do we do that? We help local ecosystems to create new national institutions that are inclusive and representative of the local ecosystems. The demand side, the intermediaries, the supply side, the market builders, so academic institutions, consultancies, and so on, and very importantly, in partnership with government. And so these new national institutions, we call them national partners, and they work on two essential levers for change. One, policy, so policy changes, new rules, new regulations, working with government to create the best possible incentives for capital to flow towards impact, and also creating or disseminating new financial instruments or financial vehicles that may be missing in the market. So creating fund of funds, disseminating sustainability-linked loans, for example. I mean, there is a ton of those. So our approach is really systemic and holistic, and that's why I like what you just described, because it's not just moving one aspect of the ecosystem forward. It's working with the entire ecosystem
at the same time.
At the same time, because if you leave one player behind, then it's hard to get them to catch up. It's probably slower, but it's the best possible way to go forward, because by creating these local institutions, they are there to last. They are there to be finding the right solutions for themselves in the next 10, 15, 20, 30 years. And so that's what we do. We help these ecosystems to create those changes locally. And now I just want to maybe reflect on your question about the lessons learned. There's a ton of lessons learned, but I want to focus on something that we just recently are finishing. We're about to publish a report that is the result of a one-year working group that we co-hosted with 3 DFIs, BII, Norfund, and USDFC. And this working group was meant to look at what are the success factors for private capital mobilization for SMEs in emerging markets. I just want to repeat, SMEs in emerging markets. So we think that we've been talking about the financial issue of access, right? What kind of access, how can we improve the access for finance for SMEs in emerging markets for so long? But still, we're still talking about it. So how do we really move forward on this issue? And so we looked at where does capital mobilization happen. What we found is that it doesn't happen where we think it happens, at the co-investment level. That's how usually DFIs measure mobilization, at co-investment level. However, it does happen in downstream of their investments. So let me just give you 2 examples quickly. KCB Bank, thanks to those investments from DFIs, has multiplied or is projected to multiply by 500 their SME lending portfolio from 2017 to 2027, thanks to those DFI investments and some TA. And similarly, a French investor called Investisseurs et Partenaires, through their IPDEV fund, has a 6-to-1 ratio, leverage ratio of attracting additional private capital. So those are really success stories. And so the lesson learned here, and I'm going to contradict to some extent Françoise Lombard, is to replicate and scale what works. That's the lesson learned. We need to be much better at replicating and scaling what works. We have a ton of tools that really work, and it's not about finding new things, it's about replicating and scaling what works.
Thank you. So in your experience, what is missing for public-private investments to catalyze serious money? You answered it a bit, Christina, in a fashion that is actually impactful, but also not financially predatory against beneficiaries, or, and we have to say it, self-serving for the country where the DFIs come from, or for the corporate brand or private investors.
No, thank you. It's a great question, and oftentimes it's important to look through these investments as any sort of just transition, even outside of the context of climate. So, and Christine and I did not plan this, but her last statement is a perfect segue to my what's missing. We happen to work quite a bit outside this context, so perhaps that's why. But with respect to what's missing, replicability is actually what's missing. And when I say replicability, I don't mean necessarily replicability of what we know, but more of replicability of what's worked and what's been successful. And I'm speaking hopefully to a lot of investors in the room, and you should be concerned about primarily one thing, exits. An exit can come through two many different ways. One is recapitalization, the other is obviously buybacks, et cetera, acquisition. And I'd like to speak to just two examples that are both clear examples of success in blended finance, but yet lack replicability. And there's a clear blueprint. One in Asia is the Tropical Landscape Financing Fund. It's a partnership between UN agencies and a private equity firm in the region. Ultimately, it was to take rubber plantations, make them more sustainable, make them holistic, community-based, ultimately generate a margin, real products that could be entered into a global supply chain. Fast forward, those plantations and that entire transaction was exited to Michelin, a publicly held company. We heard a little bit about this exit, but not a lot. And I think that's a very important example to entice investors into the entire life cycle of what it means to invest in a blended finance fund, and then that blended finance fund go on to actually seek successful exits. Another example of replicability that we're seeing very little of in terms of what's missing are the blue bond. Convergence, we provided the initial design funding for the debt for nature swap in Belize, which most of you, I think, are familiar with. It's a classic structure whereby TNC, the Nature Conservancy, bought the debt off the balance sheet of Belize, refinanced it, longer tenor, lower cost. Any sort of savings went towards conservation at the country level. I'm not going to say that it was easy to do by any means, but I would say that it's replicable at this point in time. So that's a core thing of what's missing. The other aspect, I think, what's missing as we move forward is in blended finance, we often focus too much on closing the financing gap. And suddenly the financing gap to meet the SDGs, it's gone from 3 trillion to 4 trillion. I think most recently now it's 6 trillion. And then our next statement is always, well, let's look to institutional investors to help us close that financing gap. And I feel like what's missing in that conversation is, instead, let's look at what are the bite-sized opportunities that institutional investors can take. And I say that because then we're not moving massive amounts of capital in unfair ways into markets, but yet looking instead of the aggregate volume of dollars, we're looking at the aggregate volume of transactions. And investors learn through transactions. So this unfair, somewhat weighted pressure we put on investors to close that gap is somewhat missing without the tools, toolkits, and transaction level information to do so. The last thing I'll mention in terms of what's missing are non-traditional investors. Non-traditional investors tend to take a more sensitive approach to the aspects of what you're saying. We fortunately are seeing a lot more family offices talk to one another in terms of driving both the agendas of their respective communities, but also the agendas of their asset managers. So ensuring that their asset managers, whether it's UBS Optimus or others, are actually designing blended finance solutions that can make the change that's required. And then some other big players that we're finally seeing in the market, but we need to see more of, is Amundi, SocGen, others that are truly developing large-scale, multi-billion-dollar blended finance vehicles, but they oftentimes, of the handful that have done it, only do it once, and maybe, I think about 35% actually do it twice. So what's missing is my job to actually talk to them on a more detailed level in terms of understanding why that's not happening more so.
Christina, very briefly, so that we can have enough time for your 2 calls to action.
Well, my call to action is short, so. Yeah, what's missing? A ton of things are missing, but I would focus on 2 key aspects. One is support for local and locally led initiatives. I mean, we need to bring them at the front and center to what we are doing at all points in time. oftentimes we favor what we know, who we know, and don't kind of go the extra step of looking at what is happening in the countries where we're trying to create change. And so let me tell you a little bit about what 3 examples of what our national partners are doing in Ghana, Zambia, and Nigeria. So they are designing structures and vehicles that really answer their specific market gaps with a holistic ecosystem building approach. So Ghana is doing a 75 million fund of fund with 30% of catalytic capital aimed at attracting local pension funds. Now, how is that great? It's great because, first of all, it's built with impact at the heart of it from the get-go, with specific impacts that they want to achieve in terms of agriculture, climate change, women, and all of the different SDGs that they want to target. The second is that by attracting local pension funds, it unlocks local capital, which usually is just invested in treasury bonds in the country. So bringing in new investors, and also it mitigates the currency risks that we usually are always talking about. And so it's really a smarter use and a much more catalytic use of catalytic capital, and it has scale, it has national scale. So this is a great example. Now, Zambia is doing something similar but quite different because they're working with their central bank on a credit guarantee scheme. So the central bank has committed 180 million. Again, so if we think that countries are poor, etc., no, they have capital, governments are willing to invest, and if we bring them the right kind of support and structuring, it's a perfect, we're talking of public-private partnerships. It's a great example of a public-private partnership, and this is aimed to create the right kind of incentives for the local banks to on-lend to SMEs, especially in the agricultural value chain, which is a huge value chain in Zambia. So these are 2 great examples. I mean, Nigeria is doing also something similar, but they are on an earlier stage, so I won't go there. But these are 3 concrete examples of locally led, locally designed, super advanced and very relevant market building initiatives, which are there also for investors to see and look at.
Thank you. I said it earlier, I will say it again. Change Now motto is with action comes hope. And if I may say, with collective and resolute action comes hope. What is your call to action today for us?
Yes, thank you. I think that's a wonderful way to end our conversation. So within our accelerator, within Convergence, we have had the opportunity over the past almost 10 years to fund and support the early stage advancement of 70+ blended finance solutions. Those 70+ have gone on to mobilize about $2 billion of additional capital, half of which is commercial capital. That's clearly not enough, and 10 years is a long time. So my call to action is acceleration, and to join us on this movement and pathway of acceleration. Convergence, when we launched, we probably did a good job sharing the message, building the data, introducing the network, supporting the ecosystem. But we're on a pathway for much more advanced acceleration, and we're doing so, and this will be discussed more broadly at G7, but we're doing so with a G7 donor country that's actually going to invest in the accelerator to support institutional investors who really want to dig into scope, develop, launch, and build blended finance solutions. And we'll be awarding not only grant funding, but boot camp support, skill building, access to intelligence, access to networks, et cetera, specifically designed and geared for asset manager and fund managers. This is very exciting. We're flipping things on its head. We're talking now to those who need to push out or have the opportunity to push out the billions and structure accordingly. So join me on this movement of acceleration. That would be my call to action.
So fund managers, institutional investors, go and talk to Leah.
Yes.
In a nutshell.
Looking to seek out blended finance.
Thank you. Christina.
The most important thing from my perspective is to move, and you will have got the message, I think, through this short session, is to move from transaction-based or project-based approaches to systemic approaches. Things don't happen in a vacuum. And we have to look at what's happening in the ecosystem, and especially, so this is my call to action for donors, is to fund the connectors, the ecosystem builders, the risk takers who are looking at building the ecosystem. And I want to give a small shout out to our national partner in France, who actually brought together this, this session, this panel today, because FAIR is the secretariat of our national partner in France. So that's a great example again. The second is for the shareholders of DFIs, because DFIs, they can only do as much as they're being told. For the shareholders of DFIs to change the mandate of DFIs, allow them to take more risk, allow them to play at below commercial level, because most of the time they're competing with commercial investors, to release more data on the performance of their investments. This is not happening today, and this is a really, really important thing to move forward for investors to have more data. And then for investors to look at what a risk it really is. I invite investors to travel to the countries, to better know the countries, and realize that actually the investments that they are about to make are much less risky, much probably, than some of the investments that they are making in developed markets, because the risk perception is not actually the same as the risk in the countries. And something really easy to do, which is not happening today, but hopefully will happen soon, is for donors or investors to work with credit rating agencies and work with the credit rating agencies to help them grade investments that are not just the sovereign investments, but go more granular in the investable opportunities and rate them better in the countries. So that's one example. And yeah, for all of us, this is about cooperation, this is about collaboration. We have to do it as if our lives depend on it, because they do. So it's for all of us to step up, take action, go out and try to do the extra step that it takes to collaborate with other organizations and other partners on this journey.
Christina, Leah, thank you. I think the way I receive your message is that private investors and DFI shouldn't reinvent the wheel, and also rely on other experts' experience, either locally or on technical experience as well, to accept the wealth of experience and build from it, and not start over and over, to be able to achieve impact at scale, hopefully. Thank you so much. Thank you for joining us. Thank you for your attention. And I believe we have a networking session here. Okay, just right here. Thank you so much.